Thanks, Tina. My name is Baxter Hines. I am the Chief Operating Officer at Honeycomb Digital Investments. We are a firm that specializes in creating income solutions from the blockchain for our investors. I'm very pleased today to be here with Richard Johnson, the CEO of Texture Capital. For the last several years, the subject that has fallen off the radar in the financial markets may seem to be around the tokenization of securities. This was a hot topic back in 2018. Companies had long pursued the visions that are now emerging with their prerequisite history licenses and are coming to market with their preliminary issuances and secondary market solutions. With existing security regulations being applied, there are naturally nuanced approaches that need to be taken across the various jurisdictions in which these companies operate. In Europe, firms such as ArcJax, Smart Valor, and the Swiss Digital Exchange have received their licenses. But today, we're going to take a look at the state of play in the US with Richard Johnson, the CEO of Texture Capital, who has recently been authorized to trade securities in the United States. Thanks for being here today, Richard.
Hi, Baxter. Good to see you again.
You too. I'd like to see if you could just start off and tell us how Texture came about.
Yeah, sure. Thank you. So I spent most of my career in the securities industry and the trading side of things, worked on a number of different trading desks on Wall Street, moved into the kind of crypto blockchain space around 2014. I discovered Bitcoin and came at it with a trader's mindset. And then you dig a bit deeper and you realize that there's a whole lot of potential to the technology. So kind of pivoted my career towards that space. And then the light bulb moment for me was really back in 2018. If you remember, it was kind of the last bull market, the last time Bitcoin was at 18,000, as it were. And just after that, we had the ICO boom, and Jay Clayton, the SEC chairman, came out and he said things like, every ICO I've seen is a security. These platforms need to be registered under the Securities Act or the Exchange Act. And I agreed with him. I thought the technology was amazing and that companies should have a path to raise capital using blockchain technology and to issue tokens. So that's when I started thinking about starting Texture Capital. It's been a long journey. We filed our paperwork with FINRA and the SEC over a year ago, and we finally got our approval in September. It's normally a 6-month process, but when you say you're using blockchain, it ends up being, double or triple those timelines. So we're excited to move into launch mode here. We have a digital securities license, one of the very few firms in the US to have that. It allows us to conduct private placements in digital form on the blockchain, operate a digital securities offering platform, investment advisory, and secondary market trading through registered ATS, which is an alternative trading system here in the US.
Well, congratulations on getting through all those hurdles with your regulator. It's exciting to see that you've gotten to this point where you can start really, making this new technology a reality and start harnessing the opportunities that are there. What do you see as the main kind of low-hanging fruits and things that you can take advantage of now that you've gotten your licenses?
Yeah, I mean, I don't know if there's any low-hanging fruit. There's a lot of work and everything we need to do here, but we're very much focused on the private markets. When people think of the stock market, they think of NASDAQ and NYSE and things like that. But the reality is that the private markets, there are public companies that trade on those exchanges. The public markets are actually much bigger. So for example, in the US in 2019, there were $2.7 trillion of issuances in private markets, whereas compared to only $1.2 trillion in public markets. And the other thing is that in private markets, there's not a lot of transparency. It's very opaque. There's not a lot of technology even. The market structure hasn't really evolved over the last 40 years. I think the biggest evolution we've seen in private markets is probably DocuSign. So we see this as a real opportunity to come in and kind of rebuild the market structure from scratch with blockchain technology. The blockchain ledger can create a layer of transparency and recording securities ownership and transaction history. And then we apply smart contracts on top of that, which enable kind of programmatic compliance. So again, in private markets, there's a lot of very complex rules around resale, such as holding periods, number of holders, and other types of things. But with a digital framework, you can program that all into the smart contracts. So that's what we're tackling now. We're tackling the private markets. We're helping companies raise money by doing a digital securities offering. We can tokenize previously issued securities. So we're basically just taking the securities and creating a blockchain record. And I think the main advantage of digital securities is in the terms of transfer of value and on the trading side. So like the ATS is going to be key to a lot of our business strategy.
That's terrific. Now, there's so much more you can do with these blockchain solutions than what can be done on paper today. So what securities do you already have listed or do you have in your pipeline?
So we did just get approved. So we literally the end of September. So we've really just kind of started accelerating our go-to-market strategy. It's going very well. We're talking to about 10 different issuers about coming onto the platform. What's interesting here, I don't know if this is the same in other parts of the world, but real estate is a big focus. And there's a lot of interest in real estate companies or funds doing tokenization on the blockchain. I think the reason for that is that, let's think about it. Real estate is a massive asset class. It's everywhere, of course. And it's also very illiquid. So, a lot of fund structures here, they're like maybe 5 years, 7 years, 10 years, people are locking up their money, but the returns, generally speaking, have been very good. So there's a lot of demand for getting into these types of investments, but there's low liquidity. So that's kind of the sweet spot for using blockchain technology. So I think we're going to see a lot of, real estate entities coming onto the platform. Also seeing some interest in like VC type funds. There's already been a few of those that are out there. But we're targeting any type of company. Doesn't have to be a blockchain company, to kind of, to come in and use this and have some transparency, be able to connect better with investors, and also be able to offer secondary market liquidity to their investors and to their employees.
That's terrific. And what jurisdictions are you able to service right now?
Just the USA. It's the biggest capital markets in the world, so that's the one we want to work in.
Okay, well, maybe since we are now back on the U.S., talk just a little bit about the regulatory environment there and really what you are seeing. What's this whole process of getting regulatory compliant? What's that look like for you?
Yeah, it's interesting. I think that's obviously the big difference with crypto is that a crypto token can trade in Japan and then Europe and then the US very easily. It's not the same with security tokens because they're kind of confined by the jurisdiction they're in. So the way they behave in the US is likely different to how they behave in other types of jurisdictions. I think hopefully one of the goals is to have this global 24/7 trading for security tokens. A lot of people talk about that. I think we're a long way away from that. We need to kind of do the basic stuff in our own backyards first. The regulatory environment has been, it's been challenging. I think, there was a lot of, like going back to the ICO boom as well. A lot of regulators were looking at this and trying to separate, the good projects from the bad and figure out what was really going on and figure out a framework for companies like Texture to move forward. So, that's been a slow process, but there's been a lot, it's been a lot of change recently. I don't want to get into too much detail here, but there's a couple of no action letters from the SEC in recent months indicating that they're kind of changing their tone a little bit. We've also, in case you missed the news, had an election here, and that means there's going to be a change in fact, Jay Clayton's already resigned. There's going to be a change in leadership at the SEC, so we could go in a different direction there. And I think just kind of another little tidbit might be interesting. There's a new senator got elected from Wyoming who is very pro-Bitcoin. I saw something this morning saying she intends to educate the rest of Congress about Bitcoin and has previously invested, I think it's state funds into crypto assets. So that's going to be a very positive voice to have on Capitol Hill. At the end of the day, I think a lot of companies, they moved offshore out of the US. There was a little bit of regulatory arbitrage going on for a while with jurisdictions like Gibraltar or Malta kind of popping up and being very crypto friendly or blockchain friendly. But I think that's kind of changing. At least I do think regulatory attitudes are improving here in the US, and they're getting more comfortable with it. And it's never going to be a revolution. It's going to be an evolution, and we're happy that we're part of that system where there are regulators, and we want to work with them to bring this whole space forward.
Now, it sounds like we're definitely headed in the right direction and making progress. Maybe also talk just a little bit about the ecosystem that you deal with. So obviously you got an ATS license, but maybe talk just a little bit about who else you have to work with, whether it's custodians or transfer agents. Who else really makes all of this stuff happen?
Yeah, that's a very good question. Custodians and transfer agents are key. I think a transfer agent is called a registrar in the UK, but they basically record the official ledger of ownership. You basically have to have one of those involved here in the US, otherwise you can't do it. A lot of people say, oh, but blockchain is the record of ownership, and let's use that. Well, we're not there yet here. There needs to be the transfer agent in the middle. And custodians are another key feature as well. And that's been one of the things that the regulators have struggled with. If you think about, let's take Bitcoin, you can custody it on your private key, but there's concerns. What if other people, if you took that framework into crypto, into security tokens, what if other people had the private key? How can you ensure that it's safe? So you really do need a completely new framework for custody, different from crypto and different from regular securities when you're dealing with security tokens. And that's actually been one of the things slowing development down in the space. Good news on that front is that the DTCC is seen to be moving or making moves into this space. Their Project Whitney's on their website. Take a look at that if you haven't seen it. It's very interesting. So, that's another thing that we need to have. It's not just companies like Texture. We can't do this on our own. We need the other, market infrastructure players around us to kind of move forward. That's how we really get takeoff in this space.
Yeah, it's really great to see that so much of that is being built out, and that people who have professional money management experience and professional experience within the financial community are coming into the space, and it's really, making a complete community in which to do business in this regard.
You should tell us a little bit about what you're up to, Baxter, because I don't want to hog everything here. I know that you've got a book out and you've got a money management company, right?
Well, that's correct. Yes. So at Honeycomb Digital Investments, we're looking to provide products to investors that are looking to get into this exciting new digital space. As I mentioned earlier, we are focused on income solutions for our investors, and we have a lot of experience with dealing with financial advisors and people who are fiduciaries over big pools of money. What we're looking to do is provide some turnkey solutions for them to be able to get into this new and exciting space. And we are looking to both run some funds as well as be a sub-advisor to different separately managed accounts that can be on an RIA's platform or act as a separately managed account for an institution.
Yep, exactly. And again, we're not managing money. We do want to have investors on our platform, and we obviously want to have Honeycomb on our platform as well. But at the same time, you can be a funnel for more money to come into this space, more investors to come in, which again is going to help the space grow.
Yeah, and I think having educational types of opportunities like what we're dealing with now, making these interviews, having books, having different conferences, webinars that people can attend, people are going to continue to get more and more comfortable with this new technology, and I think it's just going to grow for many years to come.
Absolutely agree. That's why we're here.
So maybe let's talk just a little bit more about what you're doing on the technology front. Talk about some of the tech that you're using to make all of this possible.
Yeah, so we are, we built all our own technology, but we're not a technology company. We're a broker dealer. That's our business model. We have, we can issue tokens onto the Ethereum blockchain, but we are blockchain agnostic. We are talking with some other blockchains about possibly having, supporting them. And we're also kind of agnostic with regards to other token providers. So if somebody wants to issue a token using Securities, we'll happily, we want to trade that. We want to get that into our ATS and figure out a way to trade it. So that's kind of our approach here. The good thing, one of the great things about the blockchain space is that there's a ton of great technology out there that we've been able to use and adopt because there's been so much innovation going on. So it's really a very bountiful space in terms of technology.
No doubt about that. Maybe talk just also, we've got limited time, and I just want to ask you one more question. What other types of securities do you think we can list in the future? And what I mean there is, you mentioned some about equity, but what about some other types of asset classes or different kinds of interesting investments can you think of that may go onto the blockchain?
So I may have a different opinion to some other folks in the space. We're focused on equity, pretty much equity. I think that, like I said, one of the key things is having liquidity. And I know that there are other players in the space looking at, for example, fixed income. And that's not our expertise, it's not our focus, but I have, heard and seen examples of how there's like significant cost savings there. But I'm doubtful about how much liquidity you're going to be able to get in the private credit markets. Often it's hard enough to trade, off the run credit in listed markets and public markets. So I think, something else we're looking to integrate is stable coins at some point in the near future. That, one of the things we really want to kind of innovate here. And if we have a security transaction go off from the ATS, then to be able to settle that instantly, delivery versus payment in an atomic transaction versus the stable coin would be a huge development. So that's definitely on our roadmap for 2021. I think it's very deliverable. And that is something that you can't do right now in public markets. They settle in T+2. And there's a lot of people looking at how to do it. So another thing we're trying to do here by going into private markets is showcase all the great things you can do with the technology.
No, I think, if we can get equity starting to trade on the blockchain, that's going to be in and of itself just a massive step forward. What you said earlier about the private markets is so true. It's just grown tremendously over the last 2 decades. I think the stat that I saw said that there have been 5 times the number of companies that are private today than there were in 2000, but the number of publicly listed companies has dropped by something like 40%. So, that trend I doubt is going to subside. I think companies are going to continue to want to stay private, and this new blockchain-based structure is just perfect for them to continue to do that.
Yeah, talking about staying private longer. The average IPO this year, I did some calculations on that. That had been around 13 years before they went public. So there's been a lot of employees who've probably gone through those companies and weren't able to exercise their options or getting that cash out. There've been a lot of investors who've been stuck with that investment for a while. I'm sure they'll do well having gone public, but that's a lot of liquidity risk to take on. So we want to solve that problem. And we don't expect the private markets to be as liquid, but more liquid is a big improvement and can really transform how capital is allocated throughout the economy.
Yeah, it's definitely a win-win-win all around for either the issuer of the security, the like you said, the employees, the investors. You can just reduce so many frictions, and being able to have the blockchain run the cap table, looking at everything from the options to the stock, whatever it may be. It's just so much more dynamic and easier to maintain.
Yeah, absolutely.
Totally agree with you. Well, thank you so much, Richard, for being here today and taking time to do this interview. We really enjoyed talking with you, and I'll pass it back to Tina at this point.
Thanks, Baxter. Good chatting with you.
You too.